Hello, hello, hello. Happy Monday. How is everyone doing today? Let's see who tunes in. Good afternoon, Davey. One of the regulars. Thank you for being here. Another regular, Patrick. Thank you. Good afternoon. And what is everything controlled by whether it's green or red? Hit the like my button. the like. Let's hit the Chris button. Hey, Chris. Oh boy, that's wonder. You know what? I'm not even going to respond to stuff. I'm glad you're up on your bowling options. Thumbs up for Mike. Hey, Gary. How is everyone doing? Again, hit the like button. Hit these. You know what? Well, enough people don't even want to listen to stuff, so don't even bother subscribing. So we got that out of the way. Liking the uranium ETF so far. Wonderful thing to trade around a core position. Again, oh, I am happy. Can't you tell? I am tired of garbage out there. And you know what? I'd advise people to stop paying so much attention to all the FinTwit stuff. It's all over the place today. Oh, we're back to the pivot narrative. Not just the pivot narrative. Let's see, because ISM came in still in expansion, but employment contraction. I mean, it is going to make people watch employment, and the Fed keep an eye on employment anyways. But you had Fed speakers still out there. Emergency Fed meeting. They're gonna secretly pivot, or they're gonna pause because there's a secret Credit Suisse bailout going on. And then we have the funds protection team. That was why we rallied today. They were buying up everything so Credit Suisse wouldn't default. Blah, 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 blah. All a bunch of crap. Oversold rally, start a quarter, money being put to work. We start off, we did the live stream into the open. Okay, there was a lot of buying pressure, and then it carried on throughout the day. We even listed potential buy signals. And it's quarter money go. We had month end and quarter end on Friday. What do you have today? First, out of oversold conditions, remember, people forget stuff so easily. Watching for the bottom is why I kept pointing out extreme fear. Are we set up for a potential rally? Yes. It's not a plunge protection team trying to secretly bail out Credit Suisse because the Feds had a secret or a impromptu meeting today because they're secretly pivoting. They just haven't announced it yet. Have we got that clear? Let's just go with the simple solution. The simple solution, reinforced by Fed speak today, nothing's changed with the narrative. So if there was this secret cabal sitting here bailing things out secretly, but the Fed, when you bring that up, but the Fed's not going to announce it publicly yet, so they have to keep the narrative up because literally head explode. Done. All right, so just to recap, we touched on it this morning. By the way, if you want to go down the rabbit hole, I'm not saying Credit Suisse can't have problems on their books. I think they do have problems on their books. All right, there's just no big secret plunge protection cabal trying to secretly bail them out. If they go under, it could happen at some point. I think you will have a significant firm before this is all over, and I'm talking this bear market. You will have, there'll be probably some rescue operations at some point. I'd be more worried about stuff really hitting Japan and unwinding there. So back to this ISM. The biggest thing is prices paid still decently high, unemployment going into contraction. But the Fed, even today, we can withstand. We expect unemployment to even go to 4.5% in 2023. This is not going to be a shocker. Now, Friday is non-farm payroll. Friday is going to have a lot of eyes on it because this is the last non-farm payroll before the Fed hike, and the Fed is not going to pause going in on November. Yes, technically they could go with a 50 basis point hike, and then possibly another 50 basis point hike. My thing is this 4 to 4.25 rates by the end of the year. Again, we have lots of speaky today with the Fed. Tomorrow is a pretty quiet day except for Fed speaky. Multiple right at the open and before the open, factory orders, minor, and then more Fed speaky. So that's what tomorrow is. Big rally day, besides Tesla, which missed deliveries, in case you didn't get. But I guess also for the people who contact me, oh, well, Google and Tesla, they're working on a deal. No, that's just a rumor that was trying to put out because remember, any drop in Tesla, since it's all about the stock price, you have to have the rumors come out that now it's Tesla Google. Oh, well, people never learn. But nice little quarter start, nice bounce out of oversold, getting daily cycles back to the top, finally getting some movement on the weekly cycles. Could this have some legs? Well, that's what we're going to look at. I would, if you're got long today, I'd recommend overall to trail. 58% still for that 75 basis points. 41% for the 50. Meeting is on November 2nd as a reminder. Still negative gamma territory. What does negative gamma? You can also get the rip your face off rallies because dealers have to buy on rallies to get back to hedging. You also, what's interesting is if you see here, you want to look at your negative gamma on the puts. Look at this call gamma. This call gamma is pretty pathetic until you get to 4,000. You got minor, but look at this. And stuff was really hedged by dealers to the downside. Just why we could see a little more counter-active rally. So, and there are no earnings after the close. Nothing much before the open tomorrow. Nothing much after the close tomorrow. So it's a very, very light earnings week. I am paying attention. That's what I said before. Is there a potential buy signal on even the daily? Yes, it needs a close above Friday's high, and this would be an outside key reversal bullish bar against the rotation zone. Okay, so also looking how this day closes, let me blow up the prices. Because what's the key level we were watching? The 62.5, 36.84. The Friday's high, 36.93.75. We're trading 36.95.50 with 20 minutes left. So let's see this, but we've already closed above the 62.5. So probability-wise, we should easily retest this 37.28 to 37.51. That's why for bullish plays, I'd be trailing a stop. We could easily also, if we get into this area, go into a daily clear path. And as I talked about last week, ratchet this up and even get above the daily rotation zone on a more sustained rally. This doesn't have to happen tomorrow or Wednesday. This could be a multi-day. You could even see a pullback first. But now your key support, we'll go through key support in a second. I would not even be surprised to see a move into the rotation zone and into this clear path and potentially easily a move to 38.73 to 3900 at least. Also, I'll get to comments in a second. I see them scrolling by. Daily cycle still at the bottom. Talked about divergences. We talked about this would be the potential week for a reversal with the S&P off the 200 on the weekly. I'm just recapping stuff for especially new people turning in, and a potential snapback move with the first with the NASDAQ with the first dip on a weekly close below the 200. All right. Now where do we sit? Silver did take off. I don't know what this it's Credit Swiss cheese. I'm so upset with myself. You sold my Tesla puts at the open. You'll have plenty of opportunities to get back in Tesla short. Don't worry about that. All we need are the indices to test the 50 on the daily, which they could very well do as this declines into that 3,900 area. And the prior support becoming resistance. You look at the NASDAQ, your prior support. By the way, the NASDAQ not going to trigger a daily buy. We're still watching this S&P to see if that ekes out a counter trend daily buy. So, I mean, the NASDAQ theoretically could if it takes off in the next 15 minutes still. So, yes, I'd be watching this area overall with that key things as George is pointing out. We will look at the spiders as well because a lot of people might be in the spiders from a rally. Well, a rally I think already started. I'm going to give you the key levels. By the way, for all those thinking people, again, this is from the Cleveland Fed. This is their modeling. All right, they put out, if you don't know about it, the Cleveland Fed puts out their projections for CPI, PCE, and everything else, updated from today. All right, these numbers aren't going away. You see here, this is month over month, percentage change. Core, they're still projecting their own internal models, and I'm not going to argue whether their models are accurate. I'm saying they look at their models. They're not projecting a decrease in CPI. This is still rising, and they will take their models into account. So everybody who's saying that they're secretly pivoting, all right, I guess it's a huge secret even to the Fed speakers today. Just wanted to point that out also. Let's see. So, hey, Josh, after indices review, can you please give me your thoughts specific to a healthy PE on Google starting to look better? We can look at, remind me. Are we going to have a turnaround Tuesday? We could have a pullback after this substantial rally to start off the month. We'll take a look at that. If we do have a pullback, it's, again, could be a entry possibility. What do you think I'm going to do? Does anybody know what I'm going to draw out right now? Because I've covered this before. What am I going to draw out? Let me just go intraday first off because to show you, I had the harmonics from this morning. Then I used the pausing bar going into, remember, we go into end of European session pre-lunch. We watch that 15-minute, pull back to a 15-minute rotation zone. Then the resumptive move. I also put up the harmonic levels from to this pausing area going into the 15-minute resumptive move from the lows. So the most recent pullback, which gave me a intermediate target area and a final target area with the 75 harmonic and the key harmonics from these lows to the pausing area going into lunch. Just wanted to point that out before I removed them, since I did some teaching this morning. What harmonics do you think? And we closed above the 62.5. Unless we plummet in the next 12 minutes, we're going to close on the daily above the 62.5 for probabilities favor to continue move up. Before I get rid of these harmonics, the probabilities favor 37.28 at least to 37.51 at least, somewhere in that window. If you want to fine tune that window, well, I'm waiting for responses because I expect some longer term people here to be able to respond. Here you go. So I went from the lows overnight to this pausing bar end of day. That reinforces the 87.5 harmonics. So we have a harmonic cluster now here. And then we have a zone 37.46 to 37.51. So those are my next key major levels coming back. Right? You always have stops ready. You always. And if you're not going to put them in the market, know where they are and set up alerts. I don't necessarily put on stops on closing bases in the market, but emergency stops for insane moves I do because I don't need a close for that. What did I just put up? Single bar harmonics, especially on a wide range bar. 1.5 times the ATR. Don't even need to measure this one out. Ooh, it's going to be close. It's going to be close for the daily buy signal. But single bar harmonics, really nice clear path move setup too. Why did I put up single bar harmonics? Because if this triggers a daily buy, the conservative stop is below the low on a closing basis. So even a bigger pullback, but a more aggressive stop, because it is going counter trend, it's going to be really tight going in here. It's going to be fascinating. Counter trend, what do you think a more conservative stop would be? Below the 62.5. Why? Because what happens if you get a close below the 62.5, especially you can see the run up on the 4-hour. What does that favor? A return to the lows. Now, why is that a more aggressive stop? Because theoretically you could return to the low area and not eliminate the trade. And the highest probability stop is on a close below today's low. If you didn't want to risk that much, and I'm not advising what trade you should get in, I'm showing you how the probabilities test out. The next best stop area would be on a close, and that would be at least a 1-hour, preferably a 4-hour close below 36.2425. A very aggressive stop, if you were looking to play something more on a shorter term basis, would be have to be, and you don't want to crowd a stop above a 25% harmonic on a single bar. Your probabilities of getting stopped out are very huge. That would be 36.77. And that just happens to come in line with this prior, and that would be on a closing basis. If you needed what I call a walkaway stop where I'm just going to bed, and if we plummet, my walkaway stop, if I can't do a closing stop on the 62.5 because I'm not willing to set an alert that wakes me up, or I just can't do that, the walkaway stop would, and this is the intra-bar stop, would be below the 75%, and for a very aggressive stop would be below the 37.5. So a trade below that would take it out. So if we do pull back, that's the key things that I would be watching. And now we do our multi-time frame. What's right here? The 1 hour. At that key support level and the 25% harmonic. So going into overnight, that's one of the pullback zones. Why it's riskier with this stop level is because you can easily pull back into this area. That's why the much stronger stop is below the 62.5, because that takes the pullback into the 1 hour rotation zone out of the way. The 4 hour is still not hooked up, but if you see, that's right, looking to hook up at the 37.5. So also your stop below the 62.5 takes out that possible of the pause, the pull up of the rotation zone, and that key area. So that's how you use single bar harmonics. We have chipped away already. We've returned to the daily rotation zone, the bare minimum. I'm expecting this with the probabilities. I'm just seeing where this is going to close, because the daily buy again has to close above Friday's high. Otherwise, this would just be a recovery buy above that 62.5. Does that make sense to everybody? So we'll check in there. Also, once we get into this area, you do have the clear path move. And if you look, there's the minor stopping areas, and you can use those for intermediate stop raises. Remember, when you see a clear path move on a higher time frame, use the lower time frame key points for stop raises or profit, or both. So those are your key levels. Does that? I hope that makes sense. Now, And Chris got it right with the harmonics, single bar harmonics. What caused the rally today? Generally, beginning of quarter, out of deep oversold conditions, buying. At first day of the quarter, we ended the quarter on Friday. First day of the quarter, lots of fun money gets put to work. Well, why wasn't it put to work on Friday? Because you're judged not only on month-to-month results, which are minor, but quarter-to-quarter results. So you're putting your money to work at the beginning of the quarter. Bob is all right. Bob should be back tomorrow afternoon. And by the way, in case you missed it, I did put up the new Futures Edge on YouTube today. It's also on Spotify if you just want to listen to it. But it's if you want to look at the video, it's on the YouTube channels. As a self-designated path trading associate, well, now we're having path trading associates. Wow, I didn't know that. We had two dips into oversold RSI crater territory. A decent bounce is due. It is. And what do you still do? As you said, you still trail out stops because we're still in a bear market. And you can get counter trend bounces, which is what we're expecting. We can peek in at gold in a minute. Hello, hello, Amit. I'm glad you like this morning's class. Also, if for those, I'll just touch on it. For those following along with the tick in the lunchtime, do you see any? All right, here was Friday, right? You see any difference between a big down day with where we were dipping to? By the way, the first time it hit below 1,000 was going into the close, on the sells going into close for profit taking. Other than that, you got some dip. Remember that 15-minute rotation zone, end of Europe close into lunch? You got the dips. Did you get a ton of selling pressure? No. This was an overall very bullish day on the tick. Compare that to Friday. You see, look at all these. You look at all the tick down here. Look at the multiple things below 1,000. You pretty much had one bar into the close, profit taking, hit that 1,000. Other than that, never touched it, and you rarely got extended time frames into deep negative territory. If you don't know what I'm talking about, go watch this morning's live stream, especially about 30 minutes in, 29 minutes. I go through a bunch of stuff. Gary, I didn't say you could eat dinner during the live stream. No, we didn't look at oil yet. So you can do your analysis on the NASDAQ. There won't be a buy. I'm still watching this S&P to see. We got 2 minutes left. It's going to get really close. It's going to be fascinating. It's actually quite fascinating. The Dow for the daily buy, which raises the probabilities for the move, would need a close above 29,549. Still trading slightly above it. The Russell for the daily buy would need the close above 1715.90 and looks 1715.90, yeah, and we're gonna look at close at 1718.70. 1750, that number can't be right. What was the high? Why is that number? Oh no, that's 1715.90, sorry. 1718.70 right there for the close. All right, so those are your key things. The DAX did get no, it did not get a buy. Now let's get to some other markets. Let's get to some other markets. We'll look at the notes, then I'll get to crude notes. A continued relief rally, finally getting the other side of the rotation zone. No sell signal just yet. By the way, just to point out, this back on the 28th was the aggressive buy I talked about. Close above this bar, continued up through the other side. This is virtually the hit on the other side of the rotation zone. So now it's really aggressively raised stops. You can see there are multiple entries. Why we use, here are your single bar harmonics, just to recap so people can tie this in. You see how you got pullbacks? Single bar harmonics, still have them on here. Where'd the pullbacks come to? 50 to 62.5. Did you get the close below the 62.5? No. So you got two pullbacks at 50% and then the move back up. So can you get pullbacks after a strong move that triggers a daily buy? Yes. That's why I listed the secondary stop, 62.5. And the target off this, once you've hit already the first side of the rotation zone, is the other side of the rotation zone and a key breakdown zone. Just wanted to cover that. Now I can raise these. And raise the harmonics for the pausing bar. All right, here's your crude. Crude, again, bounced off the short-term levels. Short-term levels, and then back retesting the other harmonics, testing those harmonics, going up to short-term levels. There's no great daily buy signal just yet. The preliminary buy signal was back on the 28th for testing the rotation zone. Already tested it. There's no great buy signal with cycles at the top. The next little minor buy thing, remember, we're not into a strong clear path move. We're counter trend. The next little thing would be on a break above today's high. And the next target would be about 86.50 and then 88, 87.95. So there aren't a lot of great signals. Remember, we're just returning finally to the weekly rotation zone also after hitting the first target. So there is not much, there's not a lot of fantastic setups in crude right now. What else did we have? Some of these now are making me scroll through a bunch of stuff. Oh, I know we wanted, here's your VIX real quick. This wasn't a super, it was a pretty bullish bar, but not a super bullish close. Let's see. 36.94.50. What needed the daily close? Let's wait for the final. 36.93.75. So we may have triggered a daily buy, which could always be entered in an overnight session. So we might have the probabilities, at least on the S&P. There's going to be no daily buy on the NASDAQ. Looks like the day 29,558. So it looks like a daily buy on the Dow, and looks like a daily buy on the Russell, and that would be for a short-term continuation pop. So the spiders have a daily buy. Also, for your retracement levels, for those playing along in the spiders who are just watching the spiders, 366.58 was the key closing area. 366.61. So eked out a close just above. What would you be watching for? Now, you wouldn't use single bar harmonics on your spiders. You'd use it to Friday's low. So if you're trying to stay in this play for longer, your conservative stop has to be below Friday's low. Your more aggressive stop would be on a 4 or preferably a 4-hour close below 361.36 for your initial stop area. You would not use single bar harmonics on your spiders. I'll reiterate that. And based off that close, your next targets, even if you pause tomorrow, 370.39 to 372.30. This isn't the strongest pausing bar, but we can use the harmonics. So key area I'd be watching is, let me make sure I got that anchored right, 369.98 to 370.39. Then an intermediate level would be 371.41, then 372.30 would be your next upside targets. Hope that makes sense. You're going to do the same thing on the Qs. The Qs, and this should tell you relative strength also, correct? Because look at overall your S&P, even you can see it in the rally, 258 basis points, 248 basis points for the NASDAQ. So the NASDAQ underperformed. You can also see it in the chart. Did the NASDAQ issue a 62.5% buy? No. Okay, so the NASDAQ is weaker. So if you were trying to decide, well, what should I play, what should I play tomorrow for continued strength or on a pullback? What would I be looking at? I'd be doing the spiders more so than the Qs. Like spiders have signals. Now the key area you're still watching on the Qs would be also from Friday's low. So if you were playing something else bullish, it would be 270.22. Let me know if all that explanation makes sense, please. Michael Anthony, where should I enter Xoxl? Well, I'm not going to give you specific trading advice. It is an aggressive counter trend buy. Oh boy. It is an aggressive counter trend buy on today's close. The stop would have to go. Again, I'm going to stress, counter trend. This is a 3x shares. You know how I feel about those. If you don't, I hate these over leveraged ETFs. But if you had to trade it, and semis are still, this would be a bounce for a rollover play. Why? As I talked about in the sector overview, semis aren't even back down here. So this is a bounce for a rollover play trading the semis. Semis I am not bullish on. Besides, this would be a counter trend bounce play. All right. So that would be, and you'd have to keep a stop. If you wanted the more aggressive stop, again, not advocating this trade at all. It was a question. These stop levels, conservative or aggressive would be below 921 on a closing basis, on at least a 4-hour closing basis. Conservative would be below Friday's low. Your targets, especially if you're trying to do something counter trend, not advisable with, there's better things to try to trade counter trend other than this. The areas I would focus on would be 1020, 1030 roughly, and then 1109. Just checking my shorter term time frames. Key support besides your harmonics level. Early warning sign is if you start breaking down below 950 for any bullish positions. And you can here's your concept with the never mind, I'll go ahead and get in that later. For gold? Well, the I mean, gold, you had the little short-term bullish play last week. Right now, if you're looking for, you could easily get into a nice counter trend rally, a close right at here. If you're trying to play this for the counter trend rally, there's no long-term bottoming pattern yet. There is a longer-term divergent signal. So if you're trying to call this bottom, your next minor level 1723, next major level about 1748 on the continued rally. Reconnecting with the daily rotation zone, so I'd be watching up in here on the continued rally, especially with weekly cycles moving up. Your only caution is your daily cycles already getting to the topping area. The great entry was last week. This entry, you don't want to see a close below 1655 again. And I already talked about that 1723. Do not ignore that 1723 area, at least for an aggressive stop raise, because you have the declining 50 and the 50% retracement of this down move. So do not ignore that to take some action. When you get through the indices, can you take a look at AAL? You really like trading airline related stuff. Really like it, don't you? There's your longer term stuff for AAL. Shorter term, you get a close above today's high as an aggressive counter trend trade. So that could always be traded on a break. If you're intraday trading, a break above today's high, as long as it rolls into a close above today's high, that would be a return into the rotation zone. The only longer term play is if you get a daily close back above 1280. You could actually do it on a 4-hour close also. Then you've triggered a double bottom play. Those are your two plays. Keep in mind, last week you did close below key support. So those are aggressive plays, but those are your two key plays to the upside. For AAL, you have two of them, an early entry, and that early entry, if it did close tomorrow above today's high, potentially, and you get a super bullish move, could be rolled in with a trailing stop basis into that potential double. But that's not a guarantee. A lot of it was repositioning for this quarter's moves after a bloodbath in the last quarter. Remember, this has been severely beat up. So, is it time to start buying CLF? On what time? On what time frame? Anything would be a bounce play, even on CLF. You're below key resistance. And okay, you're way below key resistance. So any buys, I'd be watching your weekly rotation zone. And look at that with the daily rotation zone right there. You don't have a strong reversal, a major reversal pattern yet, so this would just be a buy bounce play with a potential correction to the weekly rotation zone. Just using your simple support resistance. Everything, there's no strong bottoming play. So that's my answer. Is it time to start buying? And people, please put in a time frame. Is it time to start buying CLF on a 5-minute time frame or a weekly or monthly time frame? Long term, no. Not for me. Can you explain why you wouldn't use single bar harmonics on the spiders? Because this is not a bar. Just go by the rule. First off, 1.5 times, just 1.5 times ATR. Also, for single bar harmonics, you can start with that. Also, since the futures traded overnight and made a new low, key reversal low, since this doesn't really trade and we're not using the pre-market data, where's your key low still for the spiders? It's Friday's key low. So where's your retracement levels? A, this bar's not big enough. B, what's your retracement low? Is it today's low? Because it's not a huge bar. And look at this. Even with this, oh, sorry, that's the, even with this, that was the weekly bars. So if you try to do single bar harmonics, let me ask you a question. It's just logic at this point. Let's say you use single bar. Let's say you use single bar harmonics. Close below 62.5. All right. Return to these bars' potentials lows. Does that invalidate a counter trend play? No. That actually sets it up for a potential double bottom play. You're better, you're safer from the overall lows because this is your major harmonic move on this recovery. This is a one-day bounce. Now compare it to your S&P. Where are your major lows? Right here. This is a wide range bar. Hope somebody reported that. Oh boy, you guys read. Wait, I'm not even going to talk about some of this. You'll have to ask Bob. Bob can have his own reasons for doing stuff. Bob's not my clone. I don't have any short signal on the yen. Now, if they're talking about the future, I don't know. I didn't hear his call yet. I have not also listened to the Futures Edge podcast yet. I have not had time. So if you're referring to something in the Futures Edge podcast, I have to catch up with that. If you're talking about that, then they're talking about the futures, not the cash. So you have to ask the question specifically. Okay? Because remember, the futures trade inversely to the cash. So Bob will be on tomorrow. You can get his take on his positions. I cannot comment on Bob's positions. What's the best way to invest in oil? Well, if you just a pure oil play, you can play the ETF. If you, again, What kind of play do you want? And if I wanted a pure oil play, it'd be the futures for me, the mini or the micro. If you need an ETF, then you have the USO. There's another fund, and I don't remember it off the top of my head. But if you want a pure oil play, it's USO, which you still get the degradation in it, but it's definitely playable. Anything else is a combo play. Why is it a combo play? Because if you're playing something which is a pipeline also that's has a whole bunch of other fundamentals associated with it. So you can do that. I cannot comment specifically on ET. It does have a nice dividend yield. But is this going to trade? If you did a crude overlay with this, it's not going to trade specifically as crude trades. It's going to trade as, it's going to get influenced by crude, but it's not a pure crude play. Thank you, George. Yeah, there's your Invesco oil fund. So you could do that one also. Those are your two major options if you're just looking for a pure crude play. I know we had what was this? PE has been coming down on Google. Hold on, I know you asked that earlier. You want Google or GOOG? I mean, one's just the PE is 1780. This would be a short-term play still. This is in the reversal area, so it's still with this. This would be a short-term play on Google. Remember, if Google's earnings start coming down and the price stays the same, the P to E goes up. So that's why I'm still watching for earnings compression. Anything on Google right now would be a short-term counter trend rally. There's no long-term bottoming. It's in an area. I will be a little more interested once we reconnect with the 200 week, as long as it stays above 88, but I'm going to be watching for earnings compression coming in on Google also. So is it a rush out and must buy? No, not from my perspective. We probably will get a bounce. Although there was no bounce play triggered today. So on a daily, there was no confirmed bounce play. These techs, I mean, so you got Google. I like to see a bunch of these buy. There was no, remember, Apple we should still see, even with this bounce, this bounce can turn into a little rally back to the daily rotation zone. There was no buy in Apple. Okay, there's Microsoft. Microsoft, I think, did it eke out the buy? 240.54, 240.70. Microsoft is the only one that eked out a buy, I think. Facebook didn't. Nvidia didn't. We know Tesla didn't. I'm looking at mega caps. What else? I'm just... No buy. So Microsoft did buy. No buy Apple. No buy Google. I forgot Amazon. That's what I was forgetting. No buy Amazon. Now, by the way, for the people looking at patterns, this is more of a horizontal on the 4 hour. The targets are going to be a little more if you're playing the horizontal versus the little potential, but I will utilize these for a counter trend play on a daily close. This could not be done on a 4 hour close. If you're trying to play it on a horizontal breakout, your targets would be a little closer. That's the only potential revert, but there was no daily buy today. That should tell you. And also remember, we got underperformance in the NASDAQ. You better be kidding, Paul. What's my downside estimate on XOM? Then I'm wrapping it up. My downside estimate on XOM? Overall? What's the downside? I mean, the downside estimate. I think overall, overall, once we have oil really unwind with the recessionary plays, I'm watching for more back to the $65 mark. Longer term. If you're trying to play something else for the shorter term, 81.50 area would be me an aggressive buy if you're trying to do dividend capture against XOM. Your dividend yield is pretty good. This can also be built into a position. I do think overall, once we get the next big oil push down, we will reconnect with at least to this 50. And that will be a gift. And by the way, the harmonics were backwards. Sorry. But it's still the 50 is going to be, every level is going to be the level. They're just labeled differently. I'm actually curious to see where this double would take us to. There's your overall. There's the first target area. There's your overall target. So short term, you got to stay with the trend. Trend is still up. Longer term, you start getting a weekly close below 79 to 91. I'd be targeting the much bigger pullback. And if you wanted to try to layer into something, your levels would be 6. If you wanted to try to put something on, because you can do the dividend and the dividend will offset some of the pullbacks. 69, I'd actually use 65 as the next entry, and then 50. Probably this will keep rising, so I go right in front of the final target. So again, it depends on your time frame, George. If you're trying to do something in the shorter time frame, anything along that holds this support is fine. If you're trying to do something in the longer time frame, my pullback levels are below there. Is crypto a buy? Are you playing with fire, Gary? What's fascinating? There's Gary's comment. What's fascinating with crypto? Look how little of that movement there is. I mean, crypto generally overdoes the moves. I don't have a great signal. On any rally, by the way, in crypto, I'd be keep an eye on this weekly rotation zone. If we do get a more sustained rally in the markets, I still don't have long-term buy in it. All right. That's where we sit. I'm going to wrap it up for now. I think I got everything. What am I watching? For short-term stuff, it's mega cap counter trend plays and things like the S&P, NASDAQ. There's not a great setup in oil. There's not a lot of stocks. In long term, not much. I've already talked about one stock I'm watching long term. There'll be others. Maybe I'll release them as something to support the channel. All right. How's Mama Kathy doing? Pretty weak sauce bounce, if you ask me, on ARK. No buy on ARK. By the way, if we do get into more, there wasn't a lot of stuff being squeezed today either. So anybody says this rally was a short squeeze, there wasn't a lot of the traditional squeeze candidates. There was some covering of selling and taking profits and getting into some new short-term positions, but there was not a lot of squeeze plays. Here's what you want to watch on ARK if you're trying to play a bounce play, but it's a fair way off. An ARK no buy signal today, and that would just be on a counter trend pop. We'll eventually see ARK in below 30 bucks. Fascinating because you even look at other stuff. You know, you'd think, look, no play in AMC, no play in GME. So this was not the try to squeeze the crap day yet. Not saying it can't happen. There's your BBY. You see anything in the traditional squeeze plays? Not for me. Oh boy. You're welcome, AP. You're welcome, Gary. Thanks for the update on TQQQ, Paul. There'll be a time for individual stocks again. There'll be a time. There'll be a great time for individual stocks again. All right. Well, there you have it. Straight from Tom's mouth. You're going to rally for 12 weeks straight through the end of the year. Every week's going to be a rally. You might as well back up your truck, load up the calls, and go on vacation because Tom said. Let me just see here. We got the final settlement. Let me just double check here. No buy in the S&P. We got the final settlement price. I always like to double check. By the way, if you're trying to execute a buy, you either literally, when I do that, I execute it with the final couple seconds left. It's preferable I just look for the next open because it's only closed for an hour. And you can generally get in unless there's some, especially in non-major earnings seasons time. By the way, no official buy in the S&P. No official daily buy in the NASDAQ. Let's check the Dow. Remember, we got to be accurate with stuff. 29,549, 29,538. No official buy in the Dow. Only a buy in the Russell, barely. So, no official buy with the NASDAQ. That lowers probabilities a bit. You didn't even eke out the buy signal today. All right, with that. Hey Santer, how are you doing? Thank you for joining us. Here is your volume. It's harder to hold on. What do I say about volume? Volume follows trend. What kind of volume day is this? It's lower on a bounce. Your still trend is down. We are getting a counter trend rally. You can see it here. Here, in case you can't see that, the volume's roughly here. Here's your Friday volume. Here's your Thursday volume. The last decent little volume day was last Wednesday, but your volume ramping up into the sell-off, and today's volume could not even eclipse Friday's. Counter trend rally still. There's your volume question. All right. You are welcome, Dimitri. Hey, Paul, ship me some crab legs, please. I love some good crab legs. All right. Talk to everyone later. Have a wonderful evening. With that, I'll see people tomorrow. Bye for now.